If you're a small trading account, I'm going to show you how to make $100 a day trading options. What's going on, everybody? My name is Brandon Trades, and like I said in today's video, I'm going to show you how to make $100 a day as a small trading account. Basically, I'm going to run you guys through my day trading strategy. It is very simple to follow. But before we can hop into the video real quick, what I need you guys to do is make sure to click that like, as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. So the very first thing you're going to need to do is you're going to need to make a day trading watch list. Now, everybody's day trading watch list is going to be different, because if I have a much bigger trading account, I can trade the stuff like Teslas, the Facebooks, the Googles, the Rokus. However, if you're a small options trading account, you should probably be paying attention to your Apples, your AMDs, your Boeing on a Wednesday, maybe Starbucks, ABBV. So you first need to find a list of day trading stocks that works best for you. So personally, the ones that I have on my list right now are going to be here. You can feel free to pause the video and take some of these. But what you need to do is you need to find options that actually fit your account size. And actually, most of these will fit for a small account. So once you have around like 10 to 15 stocks, and you can also use FinViz to find these stocks for you, what you're going to do is you're going to set up the 1 hour, 4 hour, and daily time frame. Now, if you need to figure out how to set something up like this, I'm going to leave a link down in the description on my complete ThinkorSwim trading setup. So make sure you guys do watch that video if you want to set a chart up like this. Now, on my charts, it is very simple with what I'm using. All I do is I use a set of exponential moving averages. So we go to my studies, I have the 5, 8, 21, 34, 55, 89 EMA, and we're going to be discussing how to use this in your trading. And then after that, I just have my TTM Squeeze Pro, as well as the up and down arrows that give me early entry and exit signals. So like I said, I have this on the 1 hour, 4 hour, and daily time frame. So now from here, it is very easy to figure out what side of the market we should be watching. So something I told everybody to watch today was AMD to the downside. Now, I know this chart looks like an absolute disaster, so what we're going to do, we're going to clean everything up. But basically, why did I tell everybody to watch AMD to the downside? So looking at AMD, the 5 EMA is starting to fall below the 8 EMA. The 8 EMA is below the 21 EMA. 21 is below the 55. 55 is below the 89. So as you can see, on the 1 hour, the EMAs are stacked down. The 4 hour, the EMAs are stacked down. And then on the daily time frame, it lost the daily 21 EMA, ripped right back up to that daily 21 EMA before coming back down. So since the EMAs were stacked down and it lost a very important moving average on the daily time frame, we should only be looking for puts. So here's my pre-market plan for AMD. At 8:44 a.m. today, 45 minutes before the market opened, I said AMD looking really weak, orange dot squeeze on the 1 hour, squeeze on the 4 hour, and squeeze releasing on the daily, all looking to continue to fire down. EMA stacked down on all time frames, meaning puts and puts only. Look for a break below 143.5 for a drop to 143, 142.7, and then 140.72. So again, all of the EMAs, they were stacked down. Therefore, we are only looking for puts. Now, another way to confirm this is by using the TTM Squeeze. I prefer to use the TTM Squeeze Pro, and yes, I am affiliated with them. So if you guys do want to purchase a TTM Squeeze Pro, the link will be down in the description. And I also have a video on how to use the TTM Squeeze Pro. But if you don't feel like putting $700 into an indicator, there is a free version on ThinkorSwim. However, you're not going to get the orange dots, which in my opinion are very important, as well as the black dots. Anyways, so looking at the TTM Squeeze, it has the red momentum on the 1 hour with the orange dot squeeze. The orange dot squeeze basically is saying pay very close attention. So if the EMAs are stacked down and we have red on the TTM Squeeze, and if we look at the daily, we also get dark blue and a red, which is basically telling you strong selling momentum. On the 4 hour, it is light blue. However, it's below the moving averages, so it's probably going to continue down. So EMA stacked down. The TTM Squeeze confirms it. I already know that I want to watch puts for the day. So now, other than that, it's going to be finding your entry point and your price targets. So the way that I figure out my entry points in most trades is going to be either below the pre-market lows or above the pre-market high. So again, on AMD, the EMAs are stacked down. Therefore, we are only looking for puts. So because we know we are already looking for puts, our entry is going to be a break below the pre-market low. So if we look at AMD, this was the candle that broke below the pre-market low. What did it do? Came back, tested it once, tested it twice, and then it fell all the way down to a low of 141.57. So this is basically going to be my strategy every single day in the market. Are the EMAs stacked up? Are they stacked down? Is the squeeze giving me light blue momentum? Is the squeeze giving me red momentum? If the squeeze confirms with what I'm seeing on the 1 hour, 4 hour daily, I already know which way I want to watch. And now another example of something I said to watch today. I also said today, watch ABBV. So if we look at my little pre-market list right here, ABBV on watch again, breaking 4 hour bull flag, 1 hour squeeze, and daily squeeze releasing to the upside. Wells Fargo gave price upgrade of 165, looking for a break above 122.5 for a push to 123.37, 124.25, 125, 126. So if we're looking at ABBV, again, why do I only want to look for calls on ABBV? Well, if we look at the 1 hour, 4 hour daily, we can see that the EMAs are stacked up. So ABBV has been something we have been trading all week. We traded it Monday and then we traded it today. So I'm only interested in calls on ABBV because these EMAs will act as support. We don't know which EMA it'll come to and support off of. But as we see back here yesterday, it bounced off the 1 hour 34 EMA. Or maybe it might bounce off the 4 hour 55 EMA, even the daily 21 EMA. We don't know which one it's going to bounce off of. Therefore, I usually just trade with the trend right here. So if the EMAs are stacked up, 5 EMA on top of the 8, 8 on top of the 21, 21 on top of the 34, 34 on top of the 55, and then 55 on top of the 89, I only want calls. And then again, if we look down at the TTM squeeze, what do we notice? We are getting light blue on the 1 hour with that red dot squeeze firing to the upside. We have the orange dot, red dot firing to the upside on the daily. And then on the 4 hour, it was finally breaking out of that bull flag right here. Now it does have dark blue on the 4 hour. However, if it holds above the moving averages, it will turn light blue. So again, since the EMAs were stacked up, we are only looking for calls. If they were stacked down, we're only looking for puts. Well, where is our entry on ABBV? Above this post-market, pre-market high. And as you can see, once it broke above it in the morning, broke above, came back, retested as support, and then it pushed all the way to a high of 123.9. These contracts did over 100% within the first 10 minutes of the market open. So again, entry above pre-market highs, and then we look to take it even higher to the upside. So now, basically, how are we finding our price targets? There's many of things that you can do to find your price targets. One, you can use support and resistance. You can use Fibonacci extensions if something's above all-time highs like ABBV, or you can even use your person's pivots. So I have videos on all three of these indicators, Fibonacci, person's pivots, as well as how to draw support and resistance. So actually 2 indicators. But all of those videos are going to be down in the description as well. It's going to show you guys how to find your price targets. So make sure you guys do watch those videos as well. But that's basically how I'm going to be finding my price targets for the day. Now, as a small account, this is going to be the biggest thing. This is why you need to find contracts that are affordable for your options account. So let's just base this off of a $1,000 trading account. You should never be using more than 10 to 15% of your portfolio at all times. So let's say like 100 to 150 bucks. So you need to find some type of stock that you can trade where you're able to buy, I would say, at least 2 contracts. So let's say that we did enter these ABBV contracts this morning at around $50 per contract. Well, if you're following the 10 to 15% rule, you can buy around 3 contracts for ABBV. Now, let's say you buy those 3 contracts at $50 a piece and ABBV goes up 20%. You have an option right here. You can sell all 3 of your contracts for 20%, which is what most people do, and that's why they don't see their account grow as much as it should. So what I am a big fan of is scaling out of your winning positions. So again, if we bought 3 contracts of ABBV and they went up 20%, if you're a small account, I would say sell 1 of your contracts at 20%. Now at this point, you have 2 contracts that are running. The best thing to do is just put your stop loss at break even. There is zero reason a winning trade should go red. So now you have your stop loss at break even. Well, what if ABBV is now up 50% on 2 of your contracts? Well, guess what? Now you're going to pop off another one of your ABBV contracts at 50%, and then you're going to move your stop loss to around 20 to 30% in profits. And guess what? What if ABBV goes up 100%? Again, which it did in the first 10 minutes. Boom, you can exit your trade full position, and there you go. You basically made your $100 for the day. Or even a good example was Apple yesterday. Let's say that you were trading Apple and you only had 1 contract because, again, you're following the 10 to 15% rule and you're using proper risk management. Well, if you're only taking 1 contract, and yesterday I told everybody to watch Apple for a bounce at this 1 hour 21 EMA. So here it is. Yesterday, Apple looking for an infamous J-Dom bounce at 170.67 for a possible pushback to the upside, or a break above 173.88 for a push to 175.68. So as we can see, Apple came straight down to the bounce area and was able to push back up in price literally to a T. So if we just go here and we mark this as our bounce and we go to the 10-minute and we look at it yesterday, you can see Apple came down and immediately came back up. So again, if you're using proper risk management and you were to only buy 1 contract in this scenario at, let's say, $125, well, again, these contracts went up 100% within the first 15 minutes of the market open. So maybe you buy 1 contract at 125 and your contract goes up 25%. Well, at this point, what you're going to do, again, you're going to put your stop loss at break even. That way you're playing with the market's money. Worst case scenario, pulls back, hits your stop loss at break even, and you broke even on the trade. You didn't lose anything, which is the kind of situation you want to be in as a small account trader. So we always want to limit our risk in the market. Well, now Apple's up 50%. Again, if you bought this thing for around 125, you're going to be up around $60, $65. Well, what if it's up 50%? Move your stop loss to around plus 20 to plus 30%. As Apple continues to go in your favor, just keep squeezing your stop loss all the way up, or until you're eventually satisfied with your profit. So again, if your goal is $100 a day, boom, I'm gonna take my $100 for the day and I'm gonna move on and go do something else productive. So as long as the stock is continuing to move in your favor, all you're doing is moving your stop loss up and squeezing it until it comes back and hits it. Again, if you hit your daily goal, you hit your daily goal, you can go do something else. And this is the biggest thing. Like I said, I don't see small account traders doing this. They usually take 2 to 3 contracts, they're up 20%, and they're like, oh, I'm a small account, I should exit my position. But in reality, if you're gonna grow a small account, you need to be willing to squeeze your stops and let your winners run while cutting your losses very quickly. So for example, I took an Apple trade today, and yes, it was a loser. However, it was a small loser. So if we're looking at Apple on the 5-minute time frame, it was a bull flag forming on the 5-minute time frame. Guess what? It closed on the 5-minute below the lower portion of the bull flag. Therefore, bull flag is invalidated. Get out of the trade. As we can see, Apple pulled back really hard. So being able to admit quickly when you're wrong and letting your winners run, that's what's going to make you a consistently profitable trader, especially if you're a small account. But that's going to wrap up today's video. So if you guys would like to see more small account trading videos, make sure to comment down below, as well as clicking that like and that subscribe button. It would mean the absolute world to me. But as always, everybody have an amazing rest of your day, and I'll see you guys in the next video.